Good morning, everyone, and thank you for joining another technical analysis video here at xm.com. It's Tuesday, November 2nd. I'm Christina Barthanidu, investment analyst. Take a look at the Australian versus the US dollar today. We had some volatility following the dovish comments during the RBA's press conference early in the day. So that makes it interesting to see what are the risks in the market at the moment. As you can see, the pair could find enough support from the RBA policy meeting to bridge the key resistance of 4.7531 today, despite its continuous efforts to bridge that level during the previous days. Instead, it turned sharply lower to test the key support of 4.7460. Of course, the market trend in the 3-month picture is still valid, particularly the higher highs and the higher lows remain in place above the 9-month low 4.7105. However, any break below the 0.7460 support area would put that upward pattern under risk, and currently the bias seems to be leaning more to the downside than to the upside according to the momentum indicators. If we look closely at the RSI, the indicator has turned sharply lower and is heading towards its 50 neutral mark. The MACD has slipped slightly below its red signal line, and the stochastics are also pointing downwards, and they have yet to reach the oversold level. So overall, the risk is looking discouraging at the moment for the market. And if we closely look at the market action, the price has also dipped below the red tangent line after closing above it for almost a month. So that downside break currently seems irreversible and is adding to the negative risks. So overall, selling pressures could keep driving the market in the coming sessions, unless, of course, the 0.7460 level manages to add some footing. Even not, then more losses could follow below the 38.2% Fibonacci and the 20-day moving average, which are not far below, in which case the 0.74 level may attempt to stop the sell-off as it did earlier in mid-October. If it fails to do so, however, the price could plunge towards the 23.6% Fibonacci of 4.7317, unless, of course, the 50-day moving average manages to stop the sell-off around 0.7360. Now, in the positive scenario, if the price rebounds around 0.7460, then it should also clear the ceiling between 0.7531 and 0.7558. This is where the 200-day moving average and the 50% Fibonacci are also placed. So any break, any decisive step above this area could raise buying interest probably up to the swing high of 0.7615 from June 25. Steeper increases above from here could then clear the way towards the 61.8% Fibonacci of 4.7719. So to sum up, Aussie dollar is expected to face downside pressures in the short term, though we will wisely wait to see whether the pair can confirm that bearish risk below 0.7460. So that's all for Aussie dollar today. Thank you for watching and have a great day.